Hello, this is Steve Malone with ComStFX. Hope you're doing well today and getting some good trades. Overnight, the Reserve Bank of Australia left the interest rate unchanged at 4.25%. Most economists were expecting the overnight interest rate to be moved down by 25 basis points to 4%. With that not happening, well, there's been a shift in the marketplace. Some traders and institutions were expecting this move to 4% and for the Australian dollar to come off of its strong move up over the past number of weeks. Well, that didn't happen, and you can see in a positive interest rate, for those of you who are unaware, if there's a positive interest rate for a certain currency, expect a positive move for that currency. So with them maintaining a 4.25% interest rate, we get this strong push up in the Australian dollar overnight. Now, it made quite a bit of move to the upside. Its average daily range is running a little over 100 pips, and overnight we saw this move from a low to a high of about 120. It did settle down a little bit. I was expecting in my live active trade room for it to drop back down to a 618, but the 50% level held and it moved back above the 800 level, where many traders and institutions expect now a move further to the upside, possibly to 110. Now, we could see a pullback short term. You can see there's kind of a double top pattern, and there's a potential to see it drop back down. But if the Aussie dollar does not drop and close below the 618, so that would mean if it stays above 750, expect further move to the upside. Now let's take a look at the daily chart. And on the daily chart, you'll notice I've taken off the two yellow lines, which represent the price action channel, and I've put in its place a white line. This white line is the 10-day moving average. Specifically, it's the 10-day exponential moving average. This is a key moving average that institutions and professional traders monitor. They usually monitor the 10-day moving average and the 21-day moving average. As long as price stays above the 10-day moving average, well, we look for continual long conditions in that currency pair. However, looking down at the Traders Dynamic Index, you can see that even the market baseline is getting up here near 68. Current price sentiment, the green and the red lines, they're way up above 68. They're in an overbought condition. For quite some time now, the market's been expecting a pullback. It hasn't happened. The price got above the 10-day moving average back here on December the 20th, December 21st, and it hasn't looked back. And some are anticipating the Aussie dollar to continue its move all the way up to previous highs right around 110. Let me zoom out and take a look at this, and let me show you where that high is. That high goes back to July of 2011 up in this area, where we were sitting here at about 110.60. So the market's expecting a push back up there as long as price stays above the 10-day. Not until price drops below the 10-day, closes below the 10-day, and starts working its way down, will we see a turn or a shift in the marketplace. So there's a potential that we continue an upward move here. You can see the volatility band here starting to open up just a little bit, starting to get a little bit more of that divergence back to the upside seen in it. Also, I want to point out something as well. When you just simply draw trend lines, and trend lines have been around for 100 years, they're one of the best indicators out there from the standpoint of either walking the trend line or breaking a trend line. And what I want to point out to you is if I just connect the lows, I just start going from low to low and continue doing this, you will see that what's going on here is that the market for the Aussie dollar is getting a stronger and stronger bias to the upside. And you can see that in this case, if I go from this low to this low up here, you can see that we're still having a stronger bias. So at this point, what we're going to be watching for in our intraday charts is, do we maintain a very strong trend line to the upside? So if I zoom out a bit, you can see that the trend line right now for the day sits right about 700 level. So if we stay above 700 and we continue day after day to follow this strong trend line, let me change this just to get it set just about right. There we go. That's a little bit better. If we continue to walk this trend line to the upside, there is a chance that we see 110. A lot of market participants are looking for that to occur. Could it be a very strong push up? Possibly. Or do we simply walk the trend line? Now, using this technique, what we'll be looking for is when we eventually break the 10-day moving average. And if you notice, this last trend line here that I've drawn is right on top of the 10-day. So that 10 days is pretty much following the current trend line. If we break that 10-day moving average, then the next level to look for is the next trend line. Now, there are options in the marketplace to the upside. There's still buy stops at around the 850 level to buy it up to 109 and potentially up to 110 level. And we'll see a potential rise further here. So, long story short, look for continual opportunity to buy the Aussie dollar long. My best bet is to look for dips in the marketplace. Like if we go back over to the 30-minute chart, today what I was looking for was a dip down to the 618. That would be a 1, 2, 3 up condition. So I'm still looking for overnight into the Asian session a possible slide down to the 618, and if that holds, another push back up. Part of the move today in the Aussie dollar maintaining this upward move was also Ben Bernanke's comments to Congress about the dollar. Again, generally when Ben Bernanke speaks, it's not good for the dollar, and folks move into higher, riskier assets such as the Aussie dollar. Well, folks, Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.